Welcome to Profile Traders. This is Reza and you're listening to our market analysis for January the 6th. So what we saw in the morning was an overnight which was very much so contained. And this was possible indication that the selling pressure was diminishing and that a bounce in order to clear out all the singles above was coming. And then what happened is that we opened, got a little bit of a selling, then it pushed up very nicely, cleared above the overnight high, and was looking that it was gonna go and rally today. Only all of a sudden it shifted around, and from that top part we broke the initial balance, and the rest was history, and we dropped. And this is a drop that I warned you that it was happening. If I remember well, in my last report I told you that this was now very much so overdone on the upside, and a down move was coming, taking us first towards 2000 and then 1965. And the low of today was 1985, 20 points shy of that level. Now, this obviously is nothing that we can ignore and say that just because we have now reached the 95 level that it's done. Absolutely not. This is a initial sell-off that has initiated itself and that any further pullbacks into it will be sold. When crude is at $47.90, the Dow and the S&P, they both have no business to either be at 2,000 and the other one at 17,000 and change. An adjusted market to the price of crude, assuming that this is just weakening of supply and demand due to the global recession that has been so severe that nobody expected such a slowdown, which created such a surplus of oil, and of course other factors that have nothing to do with that. If we adjust the market to the price of oil, we should easily shred out about 4,000 to 5,000 Dow points and a good 250, 300 points off of the S&P. So what you are looking at now is a market that is catching up finally with the price of oil. And we talked about that many times, that it was absolutely abnormal that you had a crashing oil with the market at the levels that it was. I warned you many times. So now it is catching up. This crash in the price of crude will have many severe consequences economically in many sectors related to oil. And if you really think about it, I know it could be a conspiracy theory, but it is very funny that the two things that was going on for us are both being targeted and damaged. One, it was our export sector, which was doing great because of good products and more specifically because of a very cheap dollar at the time. That is gone. Every single other monkey out there has devaluated their currencies against us and therefore gaining trade advantage. And two, the energy sector. And this is gone too. And we are sitting here like a bunch of sillies, happy that we are saving $10 every time we put money into our tank. But we forget the kind of destructive repercussions that this crash of oil will bring in the next month or months, i.e. firing of staff, closing of factories, closing of drillings, closing of new projects, default on existing debt, and on and on and on. So market is now self-adjusting, which was expected to happen. Therefore now your first level of resistance becomes 2004 to 2010. That's the level of resistance. If we breach through that, then you should target 2020 to 2023. But as long as we remain below 2010 to 2004, which I believe we should, there is more downside to come. There is definitely more downside to come. At the minimum, I would like to see 1960. But next week, earnings starting, they may play a little nasty for us down here. So expect very high volatility, extreme craziness, and unfortunately nobody can escape from that. As for crude, I mean, to me, I don't know what to tell you. It's a carnage, it's a massacre, it's a full-blown collapse, crash, whatever you want to name it. And I also warned you in the report the last time that there was absolutely nothing conclusive here on the daily chart that would signal to us that anything positive is being done in crude. Still volume is heavily exiting. Now we started another leg of direction to the downside, even though that if we zoom in our profile chart, we can see that at the bottom we are starting to form a bit of consolidation support. Therefore now we can bracket the market between 48.35 for a break to the upside, which should then lead us towards 49.50, or a break of today's low, and below that I do not know how much more there is underneath. But I know that if we do break above 48.34, chances are very high that we are going to delete part of these singles in the middle, and then if it gets really steamy, going all the way to 49.5. Also, the last time I told you that gold was looking very, very good to me, and I said that this year was going to be the year for gold. It is started already. Today was a very positive day, following through on a very positive overnight, which was following through on a very positive day before the overnight last night, so yesterday. So looking very good, looking very strong, as it should. There is a lot of uncertainty out there. There is a massive amount of toilet paper printed by everybody. Currencies are worthless pieces of paper that don't even pay interest. So now people are starting to realizing that if that other silly casino toilet paper stock market starts to burst, this asset that has underperformed for 2 straight years is not a bad buy. So money is coming into it. I'm expecting further push up at least towards 1245 to 1250. Pullbacks are buys now. 1214 is support 1. After that we are talking about 1208 support 2, and past that 1201, 1200. On the upside, fish for 1225. If we can clear that 1225, we should be straight going towards 1240. So looking pretty good, looking pretty bullish. Finally some justice is done to it. A reminder that I'm having a webinar coming end of this month covering how to trade off of levels, which is very important because like in real estate, good location and bad location makes the whole difference. I teach you how to pinpoint the levels, what to look for, how to trade them, etc., etc. So take a look at it. It's priced at 375 for 3 days, which is a very reasonable rate for how much you will learn. www.profile.com. This was Reza. Thank you for listening.